What's up everybody, Tom here with another video. What if I was to tell you that it's been a very rare occurrence that the stock market has performed a particular signal that's happening right now? What if I also told you that when these types of signals happen, they often lead to minor corrections? Well, let's take a look at our technical analysis levels together right now on the S&P 500, NASDAQ, gold, Ethereum, Bitcoin, and more to try to get a better understanding about what's happening on the markets right now. Stay tuned. All right, everybody. Well, here we are with the last 24 hours of what happened in the stock markets in the US. This is obviously our heat map provided on finviz.com, and it shows us kind of the companies that are doing well and not doing so well in the big caps. Overall, yesterday was really led by a little bit of a decline in the energy sector off several different concerns, but really just a pullback off the heater it's been on. Semiconductors, Intel did quite poorly after a nice bullish run moving up there. And Apple and Facebook had a little return to form. They've been kind of weak over the last couple of weeks. When we take a look at the markets, now we do have a little bit of imperfect data over here, but the standard Monday played out. A bit of a weird trade in the first hour. In fact, it was kind of up in the first hour. Trapped retail traders, declined for most of the day, and then ended kind of around the same point as the open. You can see here the NASDAQ was up 0.54, S&P 500 down 0.19, and then of course the Dow Jones down a little bit more, led by that energy sector. When we take a look at the sector analysis here together, realistically, the only notable I think was really energy sector. Did have a little bit of a cooler coming off on XLB, as that's been kind of big run up, and XLI as well, two sectors that we're really looking at quite a lot on this channel at the moment. And nothing else I think to note about yesterday's moves that were that important. When we take a look at our dollar index technical analysis a little bit later though, you'll see that that's really the one that we're looking at this week, and there's a few reasons why, including gold. CBOE put call ratio data just came in then. We had a slightly higher reading on the SPX put call ratio, but overall still a huge amount of calls open when compared to puts. Volume is down slightly though across these. If we take a look at our fear greed oscillator, we can also see that that's incredibly high. It has not been above this level for quite some time. In fact, the previous time it was there was kind of at the end of last year into that Christmas rush period. Notice a very similar occurrence happening this year. Do we see weakness in December, January, or February? The indicator we're talking about is predicting some kind of weakness in the stock market over the next couple of months. Options expiry is also something we'll be looking at this month, 18th and 19th, obviously important dates to have in your calendar. Everything is about call options and put options right now, with a lot of retail community using options as a way to gain leverage into the markets. And these two levels, or these two dates, are going to be important for us to look at. When we look at the PCC, put call ratio, CBOE contracts over here, we can see we've got a 0.652 reading, and this is getting incredibly low. Look here, 0.6, really one of the lowest periods. We had that in June, and we had some readings, of course, coming into that September decline as well that were down here. We're really at this critical point where the bulls and the bears are fighting it out, and while everyone's been very optimistic, we're starting to see some cracks appearing in several key alternative indicators, showing us that we should still be a little bit concerned about the markets. If we've got the VIX is still bouncing off that 20, another key little zone. A few people were mentioning the spike in it yesterday. It got up to about 22.5. But for my kind of take, I would say if we're looking at these kind of levels, guys, what we want to do is probably focus on the 23 and above. Until the VIX spikes above there, I'm not going to pay too much attention. And the main reason why is because in here, I consider it a bit more of noise. And when it breaks out above the 23, if that does occur, or it breaks underneath the 20, I'll be paying more attention. I think they're worthwhile alerts to have, as we use the VIX as an indicator of course, increased volatility and breaks of key support zones generally in the market. When you have a VIX alert going off above 23, what are we instantly going to be doing? Checking our SPX, checking our S&P 500 support zones, checking how the market's reacting across the board. Dollar index has been the most interesting kind of trade recently, along with gold, over the last couple of days. Dollar index rebounded down, as in it started selling off this 91.20 zone. Let's go down to the 4 hour talk about this level. So it didn't quite hold within the 20. It actually bounced quite a lot higher. It came up to the previous level of support, acted as some resistance, and then sold off. I'm not really convinced on strong direction here as we look at the market structure, and we had a bounce off this level of 90.70, and again we have a bounce a little bit here in the Asian trading session above the 90.70. So dollar's probably starting to consolidate a little bit down here. It's still in a downtrend. There's absolutely no kind of thought process towards longer uptrends here, but we're kind of waiting for probably the 20 exponential moving average on the daily to catch up with dollar index. And I wouldn't be surprised to see it kind of hovering in this zone for a little while. But what about gold? 1850 closed up against. Daily hit that 50 exponential we spoke about yesterday. We now expect some decline in gold. Possibly gold comes back down and now tests the 1850 zone, previous support from the top down, and finds some kind of support again. Basically, this zone is now going to act as a 20 moving average, should act as dynamic support. We should see some kind of maybe lightning bolt action. And of course, as soon as we get through this 50 exponential, gold bulls should be well in play. This is a very bullish signal for gold. Very nice close above that 1850. And we kind of suspected it may do that based on what's happening with the dollar index and also how gold's been lagging behind the dollar index moves. So very, very nice for gold traders. Silver, more of the same. Silver's stuck within more of a zone, though. It got through both the 20 and the 50 exponential moving averages here. I've got a longer term 26 alert on it. Why do I have that? Well, we've got so much support going across this line, resistance as well. And if it gets above 26, I'm kind of looking at it from a very more bullish standpoint. And that's because we've had so much well thought out market structure below this point. We're breaking through what is clearly a key 00 line. Remember, gold and silver specifically like going towards double zeros, 26, 25 on silver, even the 50s, 24.50 where it is right now. These act as resistance and of course support in the market. So 26 will be probably the longer term alert we're looking for on silver, and we wouldn't be surprised to see some sell pressure there. And then if it gets through, that really signals up to 28, possibly even up to 30 in the longer term bullish cycle. Yesterday in the live stream, we were looking at silver as well, and we noticed that while people were dumping a lot of contracts of gold, they were not dumping in the same quantity silver contracts. And I think that's because silver is used in rebuilds around the world, and there's a huge demand right now for copper, iron ore, and every other commodity. So I think silver has a lot of pent-up demand along with its hedge-like properties. Very interesting to continue watching silver on this channel moving forward. Ethereum continues to hold this little bit of a trend line. You can see it's starting to peter out. We do want to see Ethereum's strength coming through now. We've got multiple touches of this support. We're basically here at around 589.70 right now. Regardless of whether this breaks down on this trend line, the main thing we're looking for is this 1, 2, 3 touch around 620. A break close above there will be significant. And of course, any conservative pullback down to this zone, we should see met with some kind of buying pressure from a technical analysis standpoint. Very interesting level on Ethereum, and it's been a great technical trade on the cryptocurrencies over the last month. Bitcoin, very similar. It did get through that little bit of a trend line yesterday, came down, hit the 50 exponential, and it's bounced off it again. It continues to try to coil and try to consolidate below this 20,000. We've still got our 18.6, 18.5 zone as the key level of longer term support, and we're using the 4 hour here as we do like swing trading this particular pair. So for Bitcoin, it's really just doing exactly what you want as a bullish technical analyst right now, coiling before reaching a critical psychological zone at 20,000. So yesterday we also spoke on our weekly analysis about pivots, and we spoke about the monthly pivot and the monthly pivot for the stock market at 37.50. We also talked about the central at 35.20, and I think these two zones are very much in play this month during the month of December. Generally, we see what's called the Christmas rush, which is the bullish period that basically runs into Christmas, into, of course, the Western New Year. And then we see possible declines in January or February, followed by more further bullish momentum and the normal kind of pullbacks throughout the years. However, it's not a normal year this year. And what we've seen instead is when we look at the monthly here for the SPX, is that the Bollinger Bands are being very heavily pushed 2 standard deviations out. So what this means is that the monthly is actually closing above these levels. Now, you can see how rare this is. It happened over here, and it was followed by a pullback in the market. It happened before this year's crisis, and of course, we saw a pullback. I believe, though, that even if we didn't have the crisis, this market was set for a pullback because of this type of indicator. But then we had it outside of the Bollinger, it pulled back, and again, we are outside of the Bollinger. We closed last month outside, and we're pushing December right now outside the Bollinger. Now, let's just say we get to the end of December, and we're really outside of the Bollinger again, similar to this one. Does that signal a market pullback? Its evidence is damning that it really does. Basically, when you get outside of these monthly Bollinger areas, within the next 2 to 3 months, you usually see a decline that gets you well below the previous peak, or the peak where it gets out. Over here, you can see there was a couple of months where it kind of just got through after a recovery, of course, from the GFC as well. Then it declined, nice, healthy pullback, and of course, that was met by buying pressure. We're not bearish on the market longer term. We're just saying that there is a chance that this signal is really leading up to something, a decent kind of pullback on the markets. And we've got that right now. If we go down to a weekly, you can see here, even the weekly is starting to push outside the bounds. Last time that happened over here, we did have a decline. That was, of course, earlier this year. And we also had it in August where it pushed outside. We talked about in this channel. And then, of course, we had that decline after that period. Again, outside, weekly close, starting to get a little bit overbought here in the markets. And if it's to pull back, where may it pull back to? Possibly that 20 exponential again. That may be all we get. Where is that? Very close to that monthly central pivot. So I think both of these work hand in hand on the SPX right now. If we take a look at the daily movements yesterday, there wasn't much to note as we saw. Really, we're just looking more and more and more of possible pullbacks and a market that's overextended, but the price action's still bullish at this stage. It's just that most indicators are going to be showing overbought. The one I'm paying attention to is probably going to be the Bollinger here, and of course the put call ratios across the board. So onto the NASDAQ, I don't think there's too much to note here other than it's kind of doing the same thing the SPX is doing, the S&P 500, rotating or holding around this zone. I think what's probably more interesting right now is we have been getting bounces off this 4-hour 20 exponential moving average. If you're someone that likes to take a bit more risks, maybe that's something you could look at within your trading system as we get very bullish and very aggressive on this trend. But for me, it's actually been around the stocks. And take a look at Tesla yesterday. We see a break to a new high. What does it instantly do? Gravitate towards the next psychological zone. What are the next psychological zones for this particular pair? Always the $50 and the $100. It's just unbelievable how Tesla stops just before every time. What a predictable beast in that aspect. When it breaks, it doesn't come back, give you the conservative entry. Generally, it goes straight to the next zone. And look at that, 648.72, probably got a little bit higher throughout the day. 648.79 is the day range that I have here. And then it sold off a little into the end of the day. And I wouldn't even be surprised to have a little bit of a decline tomorrow after that nice initial move. Does it go for 700? Well, if it gets through 650, it has a tendency to run towards the next $50, which is 700. And this is just getting ridiculous on many valuation metrics. But again, the TA is just continuing to show bullish. I saw a few people trying to sell against this yesterday. I think it's very tough to do so. And you must wait for market structure to show you the way on these ones on a more significant time frame. Don't try to short something that is ultra bullish. It is not a recipe for success, unfortunately. So hopefully everybody enjoyed today's video. If you did, please remember to subscribe and of course hit that alert button and give us a big thumbs up. We appreciate every one of you in the FX Evolution trading community. See you tomorrow, guys, and good luck today. Bye for now.